Hey guys, welcome back to another episode of Market Mastery. I've managed to drag the man, the myth, the legend, Roman himself out of retirement to join us one more time on the channel. So thanks for joining us today, mate.
All good, all good. Cheers for the invite.
No worries. How you been going? Hanging out in New Zealand, and you're away on a holiday at the moment, aren't you?
Yeah, mate. I've gone up north, get away from the wet weather, follow the sun. Um, got a nice place on the beach here at the moment.
Solid. Living the retirement life. I love it. But we've got pretty interesting conditions in the market at the moment. So I thought a lot of people might be interested in hearing your thoughts on what you're seeing right now, and over the next couple of months. We've been chatting a little bit in our private chat about what we're expecting. But yeah, I think a lot of guys are pretty keen to hear your thoughts on what we're seeing.
Sweet.
So should be good. I'm going to quickly just run over a few of the updates from yesterday because we've got some nice price action at the moment, guys. But this weekly order block is looking pretty nice here to get a close above on the weekly time frame. We've still got 2 days to go on that. We just closed the daily. Not the greatest close. We're sort of coming up to this higher time frame daily close resistance here and sort of rejecting off it, but it hasn't closed too bearish, and let's see what happens. The main thing that I'm sort of looking for at the moment is mainly come back, pull back into this weekly order block and then push up. A more bearish scenario would be come back to test this trend line down here and test 40K again. But we're just going to have to wait and see what the price action gives us and adjust as we go. But yeah, things like Solana looks like it's just coming back and possibly just do a flag here before the next move up to hit our target. And Bitcoin dominance doing its thing. I posted about this in the Facebook group just before. Looks like we're possibly in a descending triangle, but I think Roman might talk a little bit about that as well. The GBTC chart, is a little bit more bearish today. So we had the red pin bar here. So let's see how that plays out and the weekly close on that. But I think more importantly is the CME futures chart just closed for the day. And I don't know, to me, it looks like it just wants to have one more pullback maybe to test this level here. But it also already has, this is the fourth touch of this level through here. So maybe we're going to have a push out. What do you think at the moment, mate?
Yeah. We're definitely reaching this high time frame supply zone, and we keep rejecting that, and we're having a hard time at right now. There's still a bit of more. I think there's a little bit more room for some up, maybe a Sunday pump that we usually get that'll end up being sold into, and then maybe we'll have that pullback. On the 4-hour time frame, there's still some room for some bearish divergence to set up. So we could definitely see a little bit more upside, maybe. Maybe go for that 4-hour bear div, and then we get that pullback.
Something like that, yeah. And delineate
possibly
the high, put that fake out in there.
Yeah, take out the liquidity and then come back to the low. And then how low we go is that's the concern, I think, when it comes to this. But there's some high time frame levels in here that I'll show on my charts shortly.
Yeah, sweet.
And I think it'll depend on how we close around those, if we get accepted into those ranges or not.
Yeah, so we'll have a look at those in a second. I just wanted to quickly touch on what we were just talking about then, the possibility of a rally up here into the 618 from this move down here, and then, a potential rollover. And, this would look like, to a lot of less experienced traders, it would look a lot like a head and shoulders. And, in all fairness, it is a head and shoulders, and this would be a macro lower high as well, which, would be pretty bearish. The potential for this, set up everybody and put some sort of a fake out in, maybe come down. There's one more CME gap down there, if you believe in those or not, and then sort of do something like this. And, everyone pukes their bag at 24K, and then we go straight to 100K or something like that after that. Would probably be the roughest setup, I think, possibly for all the traders in the market if that played out. So,
yep.
What are your thoughts on that?
Yeah, man. Like, I think that's worst case scenario. I think that's worst case, unless we just puke right now or shortly.
Yep.
It looks like we definitely have set up accumulation. As you can see, those 3 dips. We spend more time at the lows than the highs. It's ascending in nature, and the higher lows coming in. And the CLN, this weekly resistance, we keep rejecting that, is horizontal. So that usually means sooner or later those sellers are going to lose their power, and the bulls will push through. But essentially, if you're a macro bull, let's say you're someone like Elon Musk, one of these meme guys with a lot of money, it takes you months or weeks, several weeks, many weeks to be able to accumulate positions. So this is an accumulation pattern within potentially a high time frame reaccumulation pattern, which I think you may have showed the guys already if you got that chart handy.
Well, we were looking at the potential of it being very similar to the 2018, 2019 bottom that we had down here, which is about 3 months as well.
Yeah. So it takes these guys a lot of time to accumulate large positions. They usually have bots just buying constantly in small amounts, not to create too much movement in the market. And it takes time to accumulate large amounts of money with the positions. If you've ever tried to get a big position in an altcoin that has low liquidity or low volume, it's very hard. So you can learn that yourself by trying to do that.
So potentially we're at like this sort of area at the moment, in my opinion. If you know it's going to be exactly the same, where it might not, because obviously market conditions are a little bit different today. You know, we were just discussing just then, you know, how you walk down the street in Miami and there's freaking Bored Apes, spray painted all over the walls. And, you know, you go to the basketball stadium here and every single employee has FTX on their shirt. FTX are now sponsoring the cricket. Like you're talking about, you're seeing FTX all over the TV in New Zealand. Like what the hell is going on? So it's quite the same as what it was back in 2019 when, you know, Donald Trump talked about Bitcoin and saying he didn't like it. And, you know, we shot up like 50% in a couple of hours because it was the first time, you know, the president had ever talked about Bitcoin. Like,
yeah.
Things are a bit different. So what we'll do is I'll hand over the screen to you and you can start to share some of your charts and take us through a few things.
Sweet. Cool. I'll do that now. Portion of screen. Yep. Can you see my screen?
Yep.
Sweet. So this is just a weekly chart I'm looking at the moment. It's pretty basic, but you should keep things basic to make clear decisions with your capital. So we had this pullback back here in February 2021, and it left this low here. And we can see, we get rid of this line, that low created where this candle body closed above, right? Which then created the SR flip of this level. And then when we come back further across to where we are now, that same bottom here was here, which then creates that exact level we keep rejecting off across the top here. All right. So until we get acceptance above there, I think we're going to have a bit of a hard time. And it's quite, if we haven't touched this price in quite a while, it's quite common or expected to reject that at the first time. Yeah. All right. So we've done that here. But as we can see, when they push into this, bearish divergence starts to form. All right, this starts to fall, this starts to climb, and we keep testing. So I think there's room for maybe one more shoot up, and then maybe get rejected there, or maybe we'll have one more up, a down, then up, and then down. So some kind of choppy behavior, but it's all about the divergence. Well, that's usually what I watch for these highs here. Like you can see when we came up to this high, we saw rejection at it, and then we pushed up again, and then rejection at it. But if we look at the RSI down here, it actually rejected the band and then made the lower high. So that divergence gave us a swing low here. So I'm looking for something like that here. And it just depends on how far we pull back. It might just be to this 43K level before we then push higher. I'm not sure. I think a lot of retail traders are going to be watching like the trend lines. And when we break that, they usually freak out. But that's usually when the best positions can also be found. So you'll be able to identify what you're looking at and market structure. But we go back out to that weekly here. We're now climbing back above the 50 RSI point. And as you know, anyone who's on the market mastery course or whatever, when you're above 50, usually you're bullish. When you're below it, usually you're in accumulation bearish. Yeah. So we're now reclaiming that 50 at the moment. It's like just right above it as we're pushing into this. This looks like much like a cup and handle pattern where it's a volatile V into a cool, calm, click U on the weekly here.
Adam and Eve, double bottom.
That's it. Yeah. So the only thing that I could see going wrong, like we talked about before, is it then becomes the longer term ascending triangle. We get that one more higher low coming in. Yeah. I'm not sure we'll get that. Usually the 1st of April was like a real turning point for the market. So if maybe we'll just go to log scale real quick and go to an index. We're coming up to Q2, and Q2 is usually a nice turning point for crypto. Like here, we turn essentially short-term bullish into May, so the May go away. Where are we? Was the next one here? Right, we turn bullish, rally just past May, still in June, July, go away. Right, so the Q2 is usually a nice kicking point. Here's another one here. Q2 kicks off there. So Q2 has this usual instant push up afterwards. I'm not sure why that is. Maybe quarterly futures, quarterly options. We know that other markets are definitely affecting Bitcoin at the moment, or maybe Bitcoin is affecting those markets. The NASDAQ and the SPX moving very similar to Bitcoin at the moment. If we do look at the SPX quickly, it's had a bit of a surge in the last couple of days, which could instill some confidence back in Bitcoin, right?
That so weekly, I love the last weekly on the S&P 500. Just like that
there, yeah.
Huge bullish engulfing candle.
Yeah. They're just reclaiming that level here.
Yeah.
And this is reclaiming the daily level at the moment. Which I could definitely see it maybe coming up and rejecting here somewhere and then coming back to here and maybe going for some kind of mean pattern. But we had that bearish divergence and that's playing out on the weekly. It looks like it's going to be a reset. It's an ugly chart. It's definitely an ugly chart, not that horizontal friendly with all these different levels. Usually have a really clean range, but you can see here that we've put in a spring, divergence. This is on the daily, and we're pushed up. Now we're at the high of this. So if we can reclaim that and flip that, we can continue, but maybe have one more pullback first. And maybe that'll go hand in hand with Bitcoin's pullback.
I mean, that'd look like big inverse head and shoulders, actually.
Yeah, it would. Yeah. You get that one more pullback here, which will then look like some kind of bull flag as well if you zoom out far enough.
Right, yeah, exactly.
Like an impulse move up, down, higher, low, go. So there's definitely room for more upside. Just the global tension at the moment, that's a real kicker. I'm not factoring it into how I trade, but I'm just ready for like a minus 20% day because some nuclear power plant got blown up by some Russian saber tools or some crazy shit like that, you know?
Pretty much. Anything can happen at the moment. I think you just have to accept that right now and just do your best, really, and try to block it out.
That's it. I think protecting capital comes before increasing capital at the moment, but at the same time, you've got to risk it to be able to make something, right? So there's no point sitting on the sidelines while the market's volatile. Just make sure you're using stop losses, and if you get to like, I'm pretty sure you probably covered this in your stream. If you get to these key levels, we'll go back to this chart, BTC, that we're at now, this key level, we can clearly see on the weekly time frame that this little fuck zone we're in, which is what I usually call them, which is just this little gap here. Right, we're in that fuck zone here, which is also that order block that I think you had on your chart here. We're above that now.
Yeah.
While we're here, we look for divergence on the lower time frames, and we look for swing fail patterns. So if we can get a combination of both, we might not get lucky enough to have both, but like that's an SFP. That's definitely a sign to be like, hey, be a little bit cautious, right? But I'd love to see maybe one more push up, take up that high with divergence as well. And then that would be my, okay, it's time to hedge. I'm not going to exit my longs from down here, right? I'm just going to hedge and protect my profit while it pulls back. And then if it then loses that, then I'll puke it and then keep your hedge open. So you get to play both sides. But if you don't hedge when it starts to look ugly here, you're going to end up holding the bag. Because where's your invalidation unless it's like a mean trend line or something? So now we're at that level. It's definitely time to pay attention. The way we got here, we were talking about it before, was that it's kind of like the staircase up, right? And usually when you get a staircase up, you get an elevator down. Matic is a fucking great example of that. Maybe the BTC version. It's quite old now. This happened a couple of years ago. Here, this on the lower time frame is exactly what I'm on about. Daily. Maybe 4 hours, a bit cleaner. Yeah. So when you get this staircase type approach, right? It's not healthy usually, right? Because there's usually a lot of divergence forming, and it just keeps ignoring divergence, right? This happens quite often in the markets. We go and actually have a look at Bitcoin in 2019.
Yeah, 2019 bottom's a good example too. I was just about to say that.
There's that one. I'm looking for this one. You'll remember this because we were trading this a lot. But this is the same thing here. It's a staircase up.
Yeah, yeah,
And to fucking gnarly, like go to directly to hell, don't pass go, don't collect $200. Like this behavior usually leads to this because it's usually ignoring a lot of bearish divergence by the time it gets to here. And then it all just pukes. So we had a nice narrative kick in of a pandemic, but what do we got right now? We're on the verge of World War III. So gotta be careful of that kind of stuff. Just so there's basic, easily identifiable patterns, and it's just a staircase.
And the
So I'm not
last
going to go
bottom
and
sort of did the
FUD.
opposite. The last
Which bottom
bottom
over here?
in the middle of last year did the opposite. It did like, the
Yeah, we'll
staircase down
inverse
and then
this.
exploded up.
Yeah, exactly. So if we invert the chart, it's exactly that, right? And this is what I'm looking for at the moment. I think we'd be somewhere like here. This is the previous high, and I think we've just rejected here. And we're going to pull back and put in that bear div.
Yeah.
And then we have the staircase down. So if I invert that, we go back to this is how it's meant to look. This is the nug rug bottom. All right, so that's the staircase down, elevator up. So I'm just watching for that kind of behavior here. It doesn't mean I'm going to trade because I think that'll happen. My trading plans are based on trading strategies, not off intuitive behavior like thoughts or whatever.
Yeah.
At the moment, maybe up, UTAD, and then come back down.
Yeah.
Something like that would be
obviously
beautiful.
Want to see a really strong breakout, maybe a flag pattern, then move up again. You don't want to see it really even come back to test that trend, that neckline.
Yeah, ideally would put in some kind of like maybe ascending triangle here.
Yeah.
And then go with like extreme force, much like 2000 and this bottom down here that you're talking about, where you finally do that ascending triangle or the ascending nature. You push up, and then you just fucking break out.
Boom. That was insane that day. I'll never forget.
That was wild. Yeah. I was grocery shopping at the time. I'm just like, man, what the fuck's happening?
We just copped it for like 6 to 8 months straight of almost zero volatility, apart from a 50% move down. It was so brutal. Then we finally get like 3 months of bull market. It was amazing.
It's lucky we were positioned for it, but yeah, it was definitely like wasn't expecting that.
Yeah,
I guess
we all know the stories of the people that were trying to trade that the opposite direction. So
yeah, suicide for one of them. That's the reality of this market, guys. So don't ever overexpose yourself and don't have a invalidation point. Make sure you've always got an invalidation point, sorry. Because when you're wrong, you can be really wrong and it can cost you dearly. Something to take note of is when we have these impulse moves up, just a random little tutorial or pro tip is when there's a gap in the market like this and there's no trading in between it afterwards, usually more often than not, price will fill this gap.
Yeah, it likes to come back, fill in.
It doesn't matter how long it takes, it'll come back and fill that. So
yeah,
pandemic or not, I think this was always going to happen, which is what I talked about. My price will always find a way. I keep saying that bullshit for all of this. And then everyone was like, why are you always so bearish? But then I didn't shed that bear skin from here onwards where I should have, because that was the high low coming in after the bump and run bottom. I got bullish here, but there's definitely much more I could have gained. So you're always learning, forever a student of the market.
Yep, that's it.
Other than that, I think we're just in this range, right? We go back to the that channel tool. Until proven otherwise, we're just in an ascending channel, right? Because these highs and lows, they match up on linear. But let me start it again. There we go. Somewhat on that. I've done that wrong. So until this is no longer working, it's going to assume that this is the channel, right? So when we get up to this level here, maybe we'll surge up and we start fucking around here. Mm-hmm. If we look at this, which is also maybe that 618 that we were talking about, right? If we get up here and start fucking around, then I'm going to assume we're coming down. I'm going to be quite, if we do surge up, which I believe we will, and we get to this area, I'm going to be really cautious. I'm going to maybe preemptively take some profit early, and then just sit out and wait for clarity. I'd rather maybe miss out on a couple of percent here, maybe 5% of profit, and re-enter after that happens than trying to be cocky and get the exact top or whatever. Yeah. When you got this
We'll get a
behavior.
really nasty SFP in there as well.
Yeah. I think when you have these right shoulders, they're usually quite nasty if we do go for some kind of mean pattern. I think that'll be the perfect setup because if we go look at the monthly time frame, we're on the right ticket. We go look at the monthly here with RSI on. Just look at the drawing tools. The monthly had this bear dip, right? And that was huge.
Yeah.
So I'm quite concerned about that. And if we do come up, maybe looking at this area here as a concerned area, which is also the 618, right? Which is also where that 50% level is from the channel. So I'm just a little bit cautious when we get here. I think I might preemptively trade it, take some profit, be happy with where I'm at, and just be glad I'm not in Ukraine getting wrecked by Russians. You know?
God.
Or the inverse, depending on how you see it.
High 50 is definitely a danger zone for sure.
Yeah. So if we do start surging up there, I'd be quite cautious. We haven't had any swing fails down here as well on the high time frames. So it's a little bit of concern. But at the same time, like if you zoom out, look at that bottom, there was none here either. So we're definitely in this section. If we were going to be in any section, we're definitely in this really painful grind up for bears, right? Because when you go to an altcoin, they usually pump like this and then they bleed out like this. And this is called pain and drain. Well, this is what I refer to it as pain and drain because it goes down in little increments so much so that people don't set stops and then they just bleed out.
Yep.
They'll lose 3% one day and they'll go back up 2%. I'm like, yay. And then it goes back down 3%. And they don't, before they realize it, they're down 20, 30, 40% of their account. And this is the inverse happening right now for bears. So the bears they're getting drained.
The range is actually quite a wide range. Like from bottom to top, it's like 20% or something.
Is it?
Yeah, 40%.
38%.
It's fucking huge.
That is huge, right? So all the shorts that were from down here, this range, they are hurting. And this is really hurting.
It's gross.
So for retail traders, right, usually you get stopped out here and that's the end of your trade because you were short and you were wrong. Or maybe you're an idiot, you didn't have a stop and you got liquidated here. Either way, you're out of the market. But these big players who have big positions, it takes them a long time to get out of their positions. They can't just nuke it.
Yeah.
You know, there's not enough liquidity. Sam talked about this in one of the videos that they did. And that was when they're wrong, they'll start rolling out of the position over weeks. Right?
Yeah, wow.
So it takes them weeks to get out of positions. So
that's crazy.
That's why I think if and when we do surge up, that's when you'll see that huge pop. That's because all these big boys who couldn't get out of their positions fast enough get short squeezed.
Mm-hmm.
The thing is I guess is when that happens, it's gonna if we get that same kind of behavior where we just pump like that, sooner or later we can see it fills that gap. So always be aware of that when you push up. Sooner or later it's going to fill that gap. A really easy way to look at that for retail or easy, just basic trading is just really basic trend lines, right? Watch this. This is really, really simple. So where we break from, right, we come back to. Where we break from, we come back to. Where we break from, we come back to. So keep that in mind. If you're having a really hard time, like say you've missed your position here and then it pushed up, don't FOMO in with nowhere to put your stop loss because if you try and enter, say here, where's your invalidation point, right? So you always be patient. Use your price returns, especially now that
it likes to come back to the breakout level.
Yeah, especially now institutions are in.
Yeah,
they love just you'll see that price is doing that much more frequently now.
Because they push it back there. That's why.
Yeah, exactly.
They want to get the breakout point.
It's a lot of market profile behavior. Yeah. It's not something that I've deep dived, but it's definitely market profile behavior where there's these key point of controls and they seem to all just get tested. So even after the fact, like that 2019 bottom here, it's definitely much more advanced stuff. And the reason I've never really told or pushed anyone towards it is because it encourages low time behavior trading, and most people don't make it on low time frames. You and me have both seen how many people come and go in this market and they didn't make it. You know, they tried to get cocky, rinsed tens of thousands, if not hundreds of thousands, and
Yeah.
If they had just stayed on the 4 hour or the daily, they probably have generational money by now.
Yeah. Back to basics. Be patient and stick to the higher time frames. Like if you're not winning on the lower time frames or you're winning big and then losing it all, try just taking it back to basics. Like I was having a chat with one of the guys in the group over the last few weeks. A couple of months ago, he hit me up and he was saying, I'm like making some money and then I lose it straight away. And I was like, well, what are you doing wrong? And he's trading on the 5 minute, 1 minute time frames. I'm like, dude, I'm not even trying to trade on those time frames. It's too hard. Go back to the higher time frames, like 4 hour absolute lowest thing that you look at. Stick to the daily and the weekly because it's easier on the higher time frames. And he's gone back to the high time frames, and he messaged me the other day saying, he's been killing it since he went back to basics and got rid of half the indicators on his screen.
That's it, man. That's it. That's why that chart I started the stream off with, it was just the what was it, the channel that I had and that one level through it. That's all I'm watching at the moment. Like the rest is all fancy. I've got this chart here, which is my main Bitcoin chart. It's got all the different levels and stuff, but I don't trade off this. This is just like technical analysis, which is not trading. Technical analysis is just exactly as it says, analysis that is technical. It's like going to Coin Market Cap and looking at your favorite shitcoins fundamentals and then researching the dev team. Yeah. You don't go and find out the dev team's name is Doge and then go and buy it because the name is Doge or something. That's the same thing as technical analysis. All you're doing is tracking the market, right? So when price, for instance, hit this level here last night and rejected, it was obvious we were going to reject at it because it was a really key level. And then we came up to this trend resistance, which can be found from here to here, right? It was obvious we're probably going to reject there as well, just like we did here when we came up to this one, right? But I don't trade off that. And I think that's where a lot of people get caught up. They're like, oh, fuck yeah, we're coming up to this 5 minute, this daily trend resistance. I'm going to grab it on the 5 minute, right? And they short this one and then get wrecked because it then pushes up. And then it comes back down and they try and short this and it then comes back up. And before you know it, they've just lost maybe 5-10% of their account because of the low time frames, usually market buying or market selling to try to react to the market. And before you know it, you just got wrecked,
Yeah, exactly.
So that's why I've got this technical analysis chart that I usually share with people. And that's just guiding what trading strategy I might use when another chart, for instance, allows for it.
Yeah.
Keep it basic, guys. Like, unless you're a desk trader working for a firm and you're blowing their money, you really want to be avoiding those low time frames. Unless you've found your niche and you're good at it. But most, like, I'd say, I hate statistics to throw them out, but I'd say like over 95% of people do not make it. And if you're someone who maybe has a hard time dealing with emotion or you're impulsive or maybe you're just not the brightest guy, and there's nothing wrong with that, you're not going to make it, right? And you'll probably be the person who's most prone to fall into that trap. Just avoid it.
Pretty much. And some people are really good at trading the low time frames. They're usually people who, have your very like, I like to think of that all the people that I've seen, they're great at trading low time frames. Like they're, high intensity, like high risk people, the really quick talkers, that type of
the poker players, right? The poker players. They usually have this. They usually it's quite an odd thing, but they usually have no attachment to profit.
Yeah,
or money.
No attachment to the money for sure. They need
they've desensitized so much from the profit and losses.
Yeah,
that when they get wrong 4 times in a row, it hasn't affected their mood. They just smash the next trade. Where if you have a loss or 2 or 3 in a row and you're starting to get down about that, low time frames are not for you.
100%.
Anyway, we'll move on from that.
Right. What else do we need to look at? I might quickly throw up the chart of your indicator actually.
Okay, go for it. Yeah.
That we were discussing just before. So I have one chart which is pretty much Roman's indicator that he developed, the profits oracle set, right? So we've got the major order blocks, which you can see this one back here, which is the last P block, right? Power block, whatever you want to call it. It's sort of acted as support. We've come back into it. We had the push up, come back into it again. Now we're rallying out of it again. And the closest one, which is this P block here, which has been acting as resistance through here. And, depending on what happens over the next 2 days, it looks like we might finally break out of this, right? But something I noticed that I thought was quite interesting was the crossovers actually on the oscillators through here. And how the last couple of times we've had a crossover through here, it's actually resulted in quite a large move to the upside, right? So there was another one back here. There was one back here as well, which was in the 2019 accumulation pattern that we've talked about a few times already. It was right in the middle of it. And that was at 3,700. The next one was here. And, we had that 60% rally that ended up rolling over for the COVID dump. The one after it was this one here, which was just the start of the breakout, into, the multiple 100% rally that we had of this bull market. And then the last one was just here when, we had a small rally and then a pullback and then, all the way up to the previous all-time high at almost 70K, right? So now we're having that same crossover again here. I don't know. To me, it's sort of telling me that there must be something bullish in the works. So I don't know. Maybe you want to take the screen back and you can run the guys through a little bit more in depth of what's going on there.
Sweet. Yep. Let me just do this. You need to stop sharing. So there we go. Cool. Sweet. So I'll just let me clean this up. Get rid of that. Just add the indicator. So which version was that? It was 2. You're using 2, aren't you?
Yeah, I think I had Oracle on. Not sure. Oh, yeah, and the one down the bottom, prophesizing.
So the one down, the ones we're looking at, there's now up to version 3.2. So I need to update yours, my dude. Just keep some new stuff.
Yeah, fair enough.
So the 3 lines that you were looking at is RSI, which is RSI, MFI, which is RSI but with volume. So MFI is money flow index, which is just RSI weighted by volume, and then you've got a custom oscillator that me and the dev have developed into, which is, I'll just color code these real quick. But that's essentially what we're looking at, is those 3, and when they cross like that, it's usually as you saw, usually a decent buy signal, or at least confirmation that you're looking the right way. So if they cross down, then be aware. So we've actually got that kind of stuff set up as alerts now. When they see this oscillator buy and oscillator sell, that's on the new version, and it'll actually give you a heads up that they are moving down now or moving up now.
Yeah, okay, nice.
So it's a good, use it on all time frames. What you just notice on the high time frame actually works on the low time frame as well.
Nice.
We'll just find this. We got those. I'm just going to color code these real quick. Let's make it a bit easier to see. We'll get gold. Put that way. Give it a moment to load. Here we go. Cool. All right.
And we're on the weekly.
Yeah, cool. All right. So with oscillators, guys, I'm not sure if you guys are too aware of them or whatever, but when they're above the 50 level, it's usually when they're strong. That means the bulls are usually taking control. The higher you get, usually the more powerful they are. But when you do get high, you usually start to get the potential for divergence. And when you get divergence on oscillators, there's usually a bit of a heads up that you might have a bit of a pullback, right? So if we were to bring up the divergence as well, we'll go to this one, that level 3, let that load on the weekly here. Cool. So these little golden dudes are when these 3 lines are actually all diverging at the same time. We call them a golden pepe. It's just a meme name for a meme thing, but it's just a heads up. The market's probably going to top or about to top. So you can see one printed here when the divergence set in. It was between here and here, and then you get a second one following up here. So what that says is pretty much if you start losing levels after like decent divergence is kicked, it's probably time to be quite cautious, right? And you can see the same thing happened over here, which is this guy. All right. But when they're crossing like this and they're all coming to that 50 level, that's a great sign, right? It means all 3 are looking strong. The bulls are taking control. And we can see that on the chart here as well. All right. It should have fallen down. It should have rejected, but we had that mean trend breakout, retest, and now we're pushing up it. So if you look at any time frame, when you have that happen, usually you get a rally off that. And to a supply zone. So wherever that supply zone is usually where you reject. But that crossover that's happening is much like that Mooney indicator that we used to look at every now and then. I still look at it. It's still a great indicator. It was the same way that went green. So when these all cross, it'd be essentially like a confirmation of trend signal or a buy signal if you're not already in the market. So when these cross, maybe if the dev's watching Hazer, we can add that as an actual pop-up alert or something for a tick box, so people can just get that in a single alert for those three indicators crossing. So we'll go into it here. I just want to check the colors real quick. So the RSI is the blue one, the light baby blue one here, which is actually the highest a lot, which is great. High above 50 on the weekly is fantastic, as we know. MFI means it's kicking up and following, which means volume's coming in. It's catching up to this one because, as we know, MFI is volume weighted, and that's catching up now, which is fantastic. And this is coming up with force. So as you can see here, when this is low and weak, we go into a bear market. When it starts to push up, we get some strength, right? A small pullback, more strength. So we're pushing up. We're in a similar position here, and we can see on the chart they look identical, right? We're pushing out of the same level, pushing out the same levels, same behavior. So you're definitely right by noticing that and pointing it out, that there is momentum to the upside here. Again, you seem to be cautious because all three of these could surge up quite a lot, and price might only come up like this high, and then you might get a bear div and price might go like that and then pull back. All right. So this doesn't necessarily mean we'll get a full swing high up here. I'd fucking love it if we did. We need to be cautious when it comes to oscillators. They can be a little bit deceiving because this entire rally to the upside to max was only here to here, right? While this was flat, right? And it surged up more than that did over there. So oscillators are a little bit confusing at the same time. You need to understand what you're looking at with them, which is, well, keeping it basic, I guess, when these three cross, have a bullish bias and just trade your horizontals. If you start losing horizontals, then assume that this is either lagging or just null and void, right? Because the market doesn't have to respect your indicators. The indicator is just indicating that something might happen. As you know, you personally know this. So while we're underneath this key level, right, which is where we keep rejecting that, if and when we get this cross and we're above that, then I think it's maybe game time, right? Buy all dips unless we lose this level, maybe that wick low, unless we lose that again. So if and when we get above here, be bullish until proven otherwise. If we can't get above here and these then roll over, because that can always happen, then be concerned. We're really at this really key zone. We can see for the last 2 years, has it been 2 years? 1 year, 1.5 years, sorry. Losing track of time.
A long time we've been sideways for.
Mate, the emotional roller coaster, right?
It's pretty brutal.
I thought we were going to get a decent rally coming out of this. I was quite shattered when we came back into the range.
Yeah, it was brutal, wasn't it?
It looked like we were going, but
everyone was in disbelief when we pulled back. I think I was the only person that was bearish. When I got that weekly and monthly SFP, I was like, oh my God, this is the worst thing I've ever seen.
This was horrible. When it came back in the range, I'm like, fuck this. And then when we got this, yeah, pretty much. I'm like, fucking hell, risk off time. Bloody hell. I was hoping that was going to be our higher low, to be honest. After this return to the range, deviation fail, was deviation. I assumed we might try and bottom here and go again. And maybe also brought in this in wedge type manner, but nah, rip. Not going to make it.
Pretty much. Well, hopefully we can get the ascending triangle now, the multi-year, a year and a half ascending triangle, and then we break out for Q4. That'd be the most bullish scenario, I think. But let's see how it plays out. Maybe we get the head and shoulders. I think, we just got to respect this range, the range that we're in here at the moment, the lower time frame range on the daily, but then also the weekly time frame range. It's been going on for over a year now. And, just see what it gives us and play it like a normal range, even though it's 100% wide, this range. This could be an accumulation range that's a part of a multi-year, multi-decade uptrend for all we know at the moment, right? So
yeah, legit.
That's all we can really do, and just continue to put ourselves in strong positions when it looks good, and when we get rejections, start to reduce exposure. That's all I'm sort of trying to focus on at the moment.
That's it, man. Keep it simple, right? So something that I'll be watching, like we've talked about here, there's these high 50s. From here to here, with the fib extension is 1-to-1, which is here.
Yeah,
I'm watching that because as you see back here, the 1-to-1s. I love my 1-to-1s.
Yeah,
that's where we rejected here.
I'll
be looking for that same kind of behavior because I was concerned because this was also that 618 from here to here when we had that moment I risked off here and then re-brought down here. So I was quite lucky, but that when we were fucking with that 618 back here, I think that's what's going to be similar to this. Right, coming up to this 618 zone.
Yep.
I have no idea when I'll do a video for you, so that's what I'm watching for. If we push up the 1-to-1 of this,
I mean, I'd kind of be pretty happy to sell at 58K at the moment, to be honest.
Right.
Wouldn't be complaining about that at all. Well, we might wrap it up there. Any final thoughts?
Levels, just trade levels.
Yeah.
So while we're above here, because this is the previous range, just real quick, that was a range we were in, and we're now deviating away from it. If we can get away from that and flip it, then we're good to go, right? If we fall back into this range, be cautious until we get back above it. If not, expect the middle of the range. And then if we get above that, it's the same thing over here. Right, we enter this range up here.
Yep.
Expect to the 50. If we get stuck at the 50 and reject, we'll come back to here. Just levels. Leave bias for the Twitter fools. Just like flow with the market. Right?
He says, you know, we're already back on. We're going to 250K.
Yeah, what the fuck? Just constantly react. Like I thought we were going to take off here. Yeah. I posted about it, but at the same time, I know my invalidation. We return back into the range.
Yeah,
that's ugly. You know, you don't want to see that. That's on all time frames.
Yep.
Every single time frame plays the same when it comes to that. Anyway, I won't carry on.
Too easy.
Like you can see it right here. Like it looked great. Everyone was bullish. Wrecked. Back in the range. Come to the lows. Just every time frame's the same, man.
Yeah. Yeah, for sure. They love to do multiple fake outs before you finally get that lift off. And if people want to get your indicator suite, they go to Phantom Profits.
Discord.
You go to Discords?
I think you go to Discord.
Or do you have a website?
Discord's probably the easiest.
Okay.
Discord.gg/profits, but that's spelled as like the wizard, PROPHETS. And just join that. Maybe just drop a link in the description or something.
Yeah, sweet. Too easy.
If they want to check it out.
All right, brother. Thanks a lot for tuning in. And we'll see you guys all in the next episode. And remember, if you like this content and you want to hear more from Roman and myself, please give us a like, subscribe. Any questions you've got, throw them in the comments down below. And you can change the level of subscription as well. So you get a notification, push notification for every video that we post as well. So you need to click on the subscribe button, then go to all, and then I'll give you a push notification every time we post something. All right, guys. Thanks a lot for tuning in. We'll see you all in the next episode.